Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing a little bit of technical analysis on Bitcoin and the cryptocurrency markets, and more specifically, I want to talk about the strength of the bulls and the bears, because lately, the bears have been extraordinarily strong. Over the last month or so, Bitcoin has seen a 50% reduction in price action from previous highs of around $6,600 to a previous low of around $3,200. And recently, the bulls have actually taken back some of that control because we've been moving upwards here in a newly formed Bitcoin rally. But that leaves us with the question, are the bears finally defeated? Are the bulls back in control? Is the accumulation phase on? Is the bull market about to start? Is the bear market about to start and $3,000 about to be broken? Who has control of this market? And more importantly, where is the market going to be going over the next couple of weeks on into the next couple of months? That's something we're going to be discussing in today's video. So if you enjoyed today's video, definitely consider dropping a like and hitting that subscribe button. Also smash that notification bell so you'll be notified every time a new video goes live. But without much further ado, let's go ahead and get right into it. Bitcoin at the time of recording this video is trading just below $4,000 on Coinbase anyway. On Bitfinex, of course, is trading a little bit higher. There's still that discrepancy in price action between the two exchanges, so we still have to look at both of them. But across the board anyway, Bitcoin is trading just a little bit above $4,000 here at around $4,040 across all exchanges. Bitcoin is up about 4% over the llast 24 hours, and the rest of the market is looking rather green as well. As we scroll down here, the vast majority of the market is green. We see DEX, ODM, Digix, DAO, Augur, and again, I have no idea how to pronounce that, up over 20%. We have a lot of double-digit gainers in today's video, probably about 25, and not actually that many losers. Definitely a rather bullish day for the cryptocurrency markets, even if Bitcoin isn't insanely bullish like it sometimes is, especially as the way it was in 2017. The rest of the market is doing rather well. XRP's up 5%, Ethereum's up 15%. Bitcoin's daily volume, over $6 billion. Now, that's very interesting, because if we come here and we look at the chart, what we're going to find is that Bitcoin's volume has actually picked up a lot here in the second half of November and on into December, partially because Bitcoin has finally started getting some volatility. Around a third of the way through November, Bitcoin fell off that metaphorical cliff. It jumped off the metaphorical cliff. It went base jumping without a parachute, whatever you want to call it. My point here is that Bitcoin saw a lot more volatility return to it after the breach of $6,000. And with that came a lot more volume, volatility, and overall interest in the market, which is a very good thing because those are fundamentals that have a lot to do with the beginning and the creation of a new bull market. So it's very important that we see that the fundamentals are doing very well, volume and volatility being two of those. We want to see a lot of that, so that draws more people in. You have the volatility junkies who left for about a month to go to the stock market, and now unless they're shorting in the stock market, they're probably going to be coming back because Bitcoin's the market that's doing well now. But overall, the fundamentals on Bitcoin are looking rather healthy. Anyway, that's basically all we want to talk about on CoinMarketCap, so let's go ahead and get into the main point of today's video, and that is the strength of the bulls and the bears. Now, guys, I do have a video in the Cryptocurrency Technical Analysis Academy with a link in the description. We have a 20% off code going on down there, but there's a video in that course talking about the strength of the bulls and the bears. And when you're doing your technical analysis, it's important to look at the market in many different ways. You want to look at the market through many different lenses, from many different angles. You want to think outside of the box. You want to think inside of the box. You want to think from the mindset of the person who created the box. You want to think about the market in as many ways as you possibly can. And one of the ways that I like to think about the market is by looking at it as a war between two factions. That war being between the bulls and the bears. And of course, in 2018, overall, the bears have been winning that war. Now, of course, the bulls have won some battles, like right here, right there, right there, right there. But overall, the bulls have been getting weaker and weaker and weaker, and they've been losing more and more battles, and the bears have been winning more and more battles, and especially more decisive battles, like that little battle that only lasted a couple of minutes right there, where Bitcoin fell below $6,000. And one of the reasons I like to look at the market like this is because it really encapsulates a lot of the different, fundamentals and technicals that go into actually analyzing the market. Because when you look at a market, well, what are you looking at? You're looking at whether or not the market went up. That's bullish price action, or went down. That's bearish price action, and it also incorporates the idea of mass psychology, which is very important in technical analysis. We also have a video on that in the Cryptocurrency Technical Analysis Academy. If you use the code Christmas 2018, we have a 20% off discount down there. Just thought I'd let you guys know about that because I haven't done that before. Anyway, it's important to look at it that way because you also want to understand the value of looking at the market through the lens of the bulls and the bears, but also since that encapsulates mass psychology, I think it's a very good way to look at the market. Of course, there's many other ways you want to look at the market, but that's a good one. And the reason I bring this up is because over the last couple of weeks, the bears have been extraordinarily strong. We saw the bears win a very decisive battle, pushing Bitcoin below $6,000 and down towards $3,000. But in doing so, the bears pushed Bitcoin all the way back so that the bears got overextended and their supply lines got cut, and the bulls were able to defend this level down here of around $3,000 and start reversing the market. And over the last couple of days, the bulls have actually managed to take control and get their initiative back and start pushing in the direction that the bulls want to go, which is up. And what does that mean? Well, what that means is that the bulls, for temporarily anyway, are the ones that are in control. But that's not necessarily what it means for the long term. Why am I bringing all this up? The point is that the vast majority of 2018 has seen that the bears are in control. That's, of course, why we call it a bear market. In 2017, the vast majority of the time, the bulls were in control. That's why we call it a bull market. I'm sure you guys are familiar with that by now. But the important thing here is we need to figure out when one changes into the other. In hindsight, it's very easy to tell when the bears took control from the bulls. It was back over here on, I believe it was December 17th, 2017, a date which will live in infamy, when Bitcoin hit $20,000 and never returned to it, at least not yet. It will in the future, of course. But it's not so easy to see into the future, or even at the time being, where a turning point is. Like that over here, it was rather easy to tell that $20,000 was the top for many different technical reasons, for many different psychological reasons, but it was rather easy in the time to tell that $20,000 was, if not the all-time high that was going to last for over a year, definitely a significant all-time high. And that's important also because it's much easier to tell back then when an all-time high was hit, but when are we going to find our bottom? We need to figure out where the bottom is, and to do that, we need to look at the strength of the bulls and the bears and see when the initiative changes from one hand to the other. And over the last couple of days, the initiative has changed from the bears to the bulls. Now, that does not mean that the bulls are in full control. That does not mean that a bull market is in motion, but I wanted to say all this to set up what we're going to be talking about here in today's video, and that is the strength of the bulls and the bears. So let's look at this. Over the last couple of weeks, we've seen the bears are in control. Now the bulls are in control. But does that mean that the bulls are going to stay in control? Let's talk about where the market's going over the next couple of weeks and try to get to the bottom of where that's going to bring us over the next couple of months to see if we're about to enter a bull market. Now, a lot of people have said that $3,000 is the bottom, and I am not very sure, but I'm rather convinced anyway that $3,000 is the bottom. I'm going to do a video on that in the future, but for the sake of this video and for the sake of argument, we're going to say that $3,000 is going to hold, and I do think it will. I think there's a lot of technical and fundamental reasons to believe that it will. So let's assume that Bitcoin's not going to go below $3,000. Where is Bitcoin going from here? Well, I've talked about in previous videos where I believe Bitcoin is going to go over the next couple of days. I think Bitcoin is probably going to have some kind of retracement and pull back a little bit and then start moving up here towards around $5,000 and then perhaps see another retracement. But what I don't think is most likely is for Bitcoin to go above $6,000 and start a bull market. Guys, what I think is most likely here is that even though the bears have lost a little bit of their initiative, the bulls are gaining a little bit of their control. If we were to draw it out, I'd still say something like 70% of the initiative is in favor of the bears. They're just on hiatus right now. They're just on break. They went on vacation for Christmas. And the bulls maybe have about 30% of the initiative. The bulls are not back in control yet. They are in control on the short term, but as we've seen many times here in 2018, the bulls oftentimes come into control in a very big way on the short term. This was a 100% rally back over here. This was a very big rally, but that didn't mean that the bear market was over. The bear market continued. So for all you guys who say that I'm a perma-bull, here's something that's going to dispute that. I don't think Bitcoin is going to go on a bull run anytime soon, and I don't think Bitcoin is going above $6,000 anytime soon. What I think is most likely here is because Bitcoin still has so many people in the bearish camp, and because so much of the volume, the trading volume is on the bearish side, that Bitcoin is probably going to trade sideways from here. Now, you might be asking yourself, well, Jeb, if 70% of the control is in the bear side and the fundamentals don't look like Bitcoin's about to go on a bull run, why would we trade sideways and why wouldn't we go down? Well, I'm so glad you asked that. And one of the reasons I believe that is obviously, of course, because I believe $3,000 is a very strong bottom that will hold. But you also have to look into the idea of contrarianism. And that's the idea that when a lot of people think one thing is going to happen, oftentimes the polar opposite is going to happen. And right now, the sentiment in Bitcoin, bar the last week or so, has been ridiculously, I do mean absolutely absurdly bearish. I have never seen a more bearish time frame in cryptocurrency than I did over here. I did see a very, very bearish time over here where people were extraordinarily bearish. But right now I've seen a lot of bearish comments. I've seen a lot of people throwing hate, for example. I've seen a lot of people dropping mean comments about them leaving the market. I've seen a lot of people be very concerned about this. I've seen it on Twitter. I've seen it on YouTube. I've seen it in the Discord server. I see it everywhere, guys. I'm a YouTuber. This is what I do. Of course, my job is to understand the sentiment of the market. And lately, people have been extremely, extremely bearish. And that's a very important piece of technical, well, actually fundamental analysis that a lot of people overlook. Because what you have to understand about markets is that they're a war between two factions, the bulls and the bears. But oftentimes, the people that are very, very bearish, that make up the vast majority of that opinion, don't control the vast majority of the money. There's a discrepancy there. You have this idea that 90% of people, for example, may hold one opinion, but they only hold 10% of the actual value, and then 90% of the value is held by 10% of the people. So what I'm saying here is that the vast majority of people don't have all that much money, but they think we're going down. But the people that do think we're going up are the people that have a lot of money, and they're the people who see the technicals for what they are. They see the forest through the trees, and they see that the fundamentals are looking very bright. And I do believe, based on that Bitcoin will probably be trading sideways here over the next couple of weeks on into the next couple of months, simply because we're starting to hit that turning point. Because every market has a turning point. Right over here, we saw a cataclysmic turning point. We saw an apocalyptic turning point where Bitcoin went from mooning to crashing, and then we saw the exact same thing. A couple of these ripple effects happen. Pun intended with XRP over here, but we saw that kind of turning point. But right now in a bear market, a lot of times you don't see that cataclysmic apoplectic turning point. You see kind of a more prolonged, gradual turning point as the market slowly turns. I like to use the analogy that the market, when moving from a bear market to a bull market, is like a very massive ship with a very small rudder. It can move in one direction extremely quickly, but to change directions on the grander scales, like over years, it takes a long time for that kind of turn to happen. Of course, when you're moving from a bull market to a bear market, not so much, but when you're moving from a bear market to a bull market, it definitely does mean that. Anyway, guys, this video has been a little rambly, but that's because I had a lot of stuff to cover, and I think that even though it was a little bit rambly, this was the best way to articulate what I'm talking about here. I do believe that looking at the market through the lens of a war between the bulls and the bears is a very good way to do so, because like I said, two of the most important things in markets are mass psychology and the idea of a market moving up and down. I mean, that's pretty simple, but that's kind of one of the most important factors of looking at a market, is understanding if the market's moving up or down, and what the vast majority of people think about the market, and what those people thinking about the market means for the market. Anyway, guys, tell me in the comment section down below if you enjoyed this video. If you want to learn more about mass psychology, and if you want to learn more about the strength of the bulls and the bears, how to gauge that strength, and how to use that strength to your advantage in your technical analysis, I highly recommend checking out the Cryptocurrency Technical Analysis Academy. There's a link in the description. For just a couple more days, there's going to be a 20% off coupon code at Christmas 2018. If you check the link down there, you can see all the videos we have to offer. We have over 5.5 hours of content in 20 videos, and I am very, very happy with it. We've had hundreds of people join. Everybody's been really enjoying the course. I haven't really had any negative feedback, all constructive criticism, and I've obviously resolved all that. I do talk to you guys in the course. If you join the course, you want to have an email conversation with me, or you want to show me some of your technical analysis and have me check it out and tell you what you might be doing wrong or what you might be doing right, feel free to do that as well. Check the link in the description. Like I said, that coupon code will only be valid for just a couple more days. I do hope you guys enjoyed this video, and I do want to thank each and every single one of you for watching as always, and I will see you guys in the next video. Peace.